Hi guys, good evening. You're watching a special here on CNBC TV18. We are in conversation today with the new head for American Express Bank in India, Manoj Adlakha. Manoj, many congratulations.
Thank you, Ranjay.
How's life been since your appointment?
Life's been good, hectic, yes.
Lot of travel?
Lot of travel, but enjoying myself thoroughly.
Tell me then, you're taking over at an important time where, the digital disruption, so to speak, is changing, is forcing us to unlearn the way we've understood banking for years. Talk to me a little bit about this. What has been the impact like for American Express?
Sure. So, November 9th was the day of demonetization. And the way we look at it, it was a reset moment. It was a reset moment. And thereon, it's going to change radically the way payments are looked at in India. When we look at demonetization, it fits in very well with the objective. The objective of demonetization was to move towards a cashless society.
That's right, yeah.
And this is completely aligned with the goals that we have at American Express. The goals that we have at American Express is how do we take away cash from consumer and corporate expenses. There was
and
a cash
thereby
crunch.
Reduce the transaction cost in
Absolutely.
general.
Just to that point, when you look at the cost of cash, and there are different estimates around cost of cash, cost of cash is estimated to be about 1.7 to 1.8% of GDP. Now that's very high. So with this measure in place, the idea is to bring that down.
So what has it been like for American Express then? Are you, in terms of, because you're also, of course, focusing on the digital fora in a very significant way. So what has it been like for your business in terms of the online traction that you're seeing since November 8th, 9th that you're talking about?
So, just going back to the November 8th, 9th thing, a couple of things happened. And those events are very important for all of us to take into consideration. One was, as we all know, there was a cash crunch, which was out there in the market for a limited period of time. And this was coupled with a lot of interventions that were brought in by the government. And those interventions were fabulous as we now see them. Let me start and talk through a few of them. One of the interventions which the government said was that, you as an industry should double the number of terminals. These are the terminals which are, deployed at merchant locations. So it took, I think, about 30 to 35 years to reach a number of 1.4 million. That was the number we were sitting at on 8th of November. So that was a number which the industry had put together over the last 30, 35 years. And the target which was given to us was that in the next 4 months, you will have to add an incremental 1 million terminals. So whatever it had taken us 30, 35 years to do, the mandate given to us as an industry body was to add another 1 million terminals. And the good thing is we've gone ahead and done it. The industry has done it.
So the amount of terminals that were added in the last 30 years have been added since November 8th?
In the last 4 months, absolutely.
Oh my God, okay.
Yes. So that's
staggering.
That is staggering, exactly. So that was one of the measures. The other thing which the government put in place was, they said, how do we, from a payments ecosystem, how do we get more and more merchants to warmly accept the card? And they put a few measures in place. So one measure which was, again, absolutely astounding in terms of think-through was, and it's a global first, it's called the Bharat QR. And QR stands for Quick Response. Over here, what happened was that this is network agnostic, and it makes any small merchant, small or micro merchant, who hitherto were not comfortable accepting the card because of the cost involved, now can do so because all they need is a phone, a smartphone. That's it. They don't need anything more than that. So that is something, it's a global first. It got launched, right? And since then, we've already seen a huge number of merchants. This happened sometime in, 4 to 5 months ago. A huge number of merchants have already got onboarded on this. Then, going on with the incentives, because the whole purpose was to get, like I said, smaller merchants, onboarded and getting into the payment ecosystem, there were tax incentives being provided for lower value transactions. So what the government said was if the value of the transaction is below 2,000, there would be a service tax exemption given to the merchant. That was another good thing. Then in certain cases, the government also felt that there was a lot of friction in certain payments. So as an example, what they put in place was that in case of an online payment, right, if the amount was again below a certain threshold, in this case less than 2,000 rupees, there would be no second factor authentication required.
Right.
Now that is again spurred the movement. So a lot of people...
So it fast tracks the process.
Exactly. It fast tracks the process, and more people become comfortable in using this. And, one or two other things that are straight away coming to mind is petrol. Now, all of us, there's a lot of people who drive cars, right, or scooters for that matter. Now, fuel is a very big expense item. So what the government actually did is that they said, if you are going to get fuel filled through a digital mechanism, which is through a card, whether it's a credit card or a debit card, we will give you, if it's in any of the government-owned petrol pumps, from the oil company, a 0.75% rebate or a cashback is being provided. That was another big,
Yes, sort of reorienting the incentive system to sort of push digital payments.
Absolutely. So, these have all spurred the movement. And what has this done? And maybe I'm missing out on one or two, but these itself have made a dramatic difference. And when we look back from November to now, if I was to take two data points, if I was to take March 2017 and I was to compare that with March 2016, there has been an increase in terms of value of transactions, and now I'm talking about at the industry level, which is credit cards, debit cards, and mobile wallets. The number of transactions that we had in March 2017. March 2017. These are data points
that's available,
which is available with RBI and published by RBI because they aggregate from all the players in the market. There was a 3x increase in terms of number of transactions. That's huge, right? Over the same period, exactly a year ago. That's in terms of number of transactions, and 2x in terms of increase in terms of value of transactions. Because more and more people started coming in to the payments ecosystem. That is when you look at credit cards, debit cards, and mobile wallets. But you look at credit cards alone, that also has seen a 1.5x increase. So if it was X a year ago, now it's become 1.5x.
Across all categories, we are seeing a spurt.
Across all categories, we are seeing an increase. And when you look at credit cards now, what we have seen is, if I was to look at just even a month pre-demonetization, if I were to look at, let's say, October or November of 2016, we were doing at an industry level, and these are all in the public domain, RBI data at an industry level would have done, on a monthly basis, we were doing, I think, about $4 billion of transactions at point of sale, credit card transactions. That number now has hit a new normal of $5.1 billion in 4 months, right? So it's a huge seismic change.
And you're one of the beneficiaries now of this, of this larger, change that's happening. So tell me, in terms of your business growth, what is, I mean, how will it change, let's say, this financial year vis-a-vis what it was last financial year?
We are seeing a significant increase. Our billings are, when I look at full year 2016 versus full year 2015, and I'm talking about calendar year here, the market grew at, I'm talking about credit cards because we're not in the debit card business. On the credit card front, the market grew at 31%. We grew at 33%, so we outpaced the market. And we
both years, 2015 and 2016?
2016 over 2015.
2016, right.
So, we outpaced the market.
How do you see 2017?
So 2017 is, again, we are off to a fantastic start. It's just, we are 4 months into the year. We are off to a very, very healthy start. And we are confident that with some of the measures which I just spoke about, which have been put in place, this is going to be here to stay.
So are you another 30% plus growth, or will that be now on because the base
the
denominator
of course
growing,
keeps increasing, but the other thing which we've also seen is that while the base increases, there are two ways in which your billings increase. One is you attract new card members into the franchise, which is what we are doing pretty aggressively. The second is a lot more merchants are also coming into the franchise, and that is a phenomenon we have seen post demonetization, where if I were to look at the number of merchants that we had, maybe 12 months ago to the number of merchants we have now, that number if that was X, now we are at 1.8X.
Almost double.
Yes.
Let's talk a little bit about, again, the payments bank
Sure.
and what it could do. So, for instance, you have an association with MobiKwik, for instance.
Right.
They could perhaps get the license sooner rather than later. Would you look at similar sort of tie-up, maybe with the Paytm going forward, just once again to sort of also benefit from this, from the disruption we're seeing in payments industry?
At the end of the day, today, our license gives us the ability to do what we want to do. But if tomorrow any new opportunities or avenues come up in terms of partnerships or alliances, we would be more than happy to consider those.
So what is your association right now with MobiKwik?
We have a stake in MobiKwik.
And then going forward, I mean, you will open to opportunities in some of the other...
Yeah, like I said, when something would come up which makes, commercial sense, which makes, sense from a customer need, we are more than open to evaluate.
You've also tied up with ICICI.
Yes.
You've tied up with SBI also,
Yeah.
ICICI Merchant Services and SBI. And that gives you more reach.
Right.
Are you talking to more banks, possibilities for more tie-ups?
So, first, let me share with you the nature of the tie-up that we have with ICICI and SBI. For us, it is imperative that we continue to expand our merchant coverage wherever our card members want it to be. So we want to be where our card members want to be, right, in terms of acceptance points. And part of it we do on our own, but when we have tied up with these two leading acquirers, which, like you mentioned, SBI and ICICI, the benefit we're getting is scale. So as they are going and tying up and signing up these new merchants, we are getting the benefit, because what is happening is these merchants then become, for these institutions, a single point of contact where with, let's say, the entire signing, agreement, servicing is done by SBI, but they are accepting cards.
And they accept
American
your
Express
cards as well,
and other card networks.
Right.
So it just eases the whole process, whether it's in terms of payment, in terms of reconciliation, and what it does for us is it gives reach to our card members. And so it's a win-win.
So would you look
and
at
we would
other-
absolutely be, more than happy to look
So
at more.
are you speaking with more banks?
These are constant discussions that keep going on. So First Data and ICICI, which is what we launched, I think, about 2.5 years ago, it's done excellent, kind of traction for us. And SBI is a recent launch. It's just been about 6 to 8 months, and it's off to a phenomenal start. And discussions would, as and when we feel we have the right partner, we'd be more than happy to discuss.
With the government pushing for more and more and wanting people to go more cashless,
Right.
one area that they've tried to sort of streamline is MDR, the merchant
Yes.
discount rate. We've seen SBI on the debit card saying
Right.
we will waive it off.
Right.
That is your big source of revenue.
Sure.
Does that concern you? Even that may apply to credit cards as well, even though credit card, debit cards function separately?
Yeah. So the way I look at this is that we maintain at American Express that competition, innovation, the product proposition, when you look at the risk appetite, customer choice, these are the factors that should determine the market price rather than any market regulation. A lot of investment is made in payments in India, whether it is on the issuing side or on the acquiring side. There's a lot of infrastructure cost that goes in. Wherever, in a few countries, this has happened in the past, that regulations have been, attempted to be put in.
Okay.
Wherever regulations have been put in, what has been, and this is, experience from one or two other global markets where this has happened, what has been the impact is that innovation has come to a standstill.
Okay.
New entrants have stopped entering. The only gainers have been the big merchants,
Okay.
and they have gained at, whose cost? They have gained at the cost of smaller merchants and at the cost of customers. So customer choice goes away, the expenses for
But how does
issuers
that
goes up.
impact American Express Bank? then?
So that's what I'm saying. So this is something which is not recommended, and this is something which we believe is not the right thing to do in a market like India, where there are so many diverse players.
Right.
Right? There is no concentration. I can understand if there is concentration of one odd player and you would want to bring in something like this. When you look at credit and debit for that matter, they're diverse players. And within that, the number one player on the credit card side has about 30% market share. And on the debit card side has 24% market share. So there is enough room for everyone to play in. And because of all the reasons that I just mentioned, I don't believe that
but the government believes by removing MDR, it's going to facilitate more and more people to use credit cards. And then scale will compensate for any loss that may come to
and like
issues.
I shared, because, it's sometimes, we've seen this in other markets.
Like,
could you Australia as an example.
Where the government wanted to do away with MDR or the central bank or whosoever, and it didn't.
Even in India, this was done in debit cards about a year ago for some period of time. That really did not spur billings. So, if the whole purpose is to get more people into the payments ecosystem, and then you got to put measures in place which address that.
Okay. The focus of American Express Bank for the last few years has been to become more inclusive as a brand.
Sure.
So any new products that we can expect, considering also the kind of data mountain that you're sitting on, you'll have the ability then to offer more customized products, exactly where people like spending, what the spending trends are, the consumer trends are. Do we expect a few new products coming in to
I won't be able to, Ronojoy, talk about specific products, but what we do from time to time is that we take a hard look at the customer needs. For us, customer is front and center of everything that we do, right? So we take a hard look at what our customer needs are. We look at the spending patterns. We leverage data in a very big way. So going back to the closed loop, we use, technology, we use data, in a very big way to look at spending patterns of our card members, and we curate merchant offers basis that. So and the closed loop helps us do something like that. So that is something which we will continue to do. It may or may not result in a new product. On the other hand, capabilities is something that we continue to evolve. So capabilities, we've just, one very exciting capability that we put in place not too long ago was Pay with Points. And that on membership rewards, where we really transform the experience of a card member, where they can even pay with points at point of sale. So these are the things which we feel that
those are the kind of innovations that you think. A couple of last things, and Manoj, you're now part of with your elevation, you're now part of the, like the American Express global management team. What's the view like on India? Because the government has just finished 3 years in government in terms of the reforms appetite. What's the view like from American Express headquarters?
I think the view is that everyone is very bullish on India, and our head office is very excited. We are highly invested in India. One of the reasons we continue to be highly invested in India is because of the fact that when we look at the set of, products, the set of assets we have, the track record that has got created, and more importantly, the trajectory which is ahead of us, just the runway for growth. When you look at a market like India, where the market is huge, but only 5% or 6% of the total opportunity today, or the private consumption expenditure, is today on
through
cards. So 94 or 95% is cash. Now that is the play which is available. That is tremendous. So there's enough headroom for all of us to play. And we have the strategic assets, we have the brand, we have the service, we have the people, and the product suite to make that happen.
So what are the 2 or 3 key priority areas for you now going forward, let's say over the next 3 to 4 years?
One would be to ensure that the momentum that we have, that continues. Second is we, as a team, would never get our eye off the ball when it comes to service. Because if there is one differentiator that we want to maintain, that is providing world-class service and experience to our customers. And it doesn't really start with customers, it starts at the prospecting stage. So even before somebody becomes a customer, the onboarding experience that we would like to give that individual has to be world-class. From there on, through the journey, that customer must feel that this is service not only world-class when it comes to a credit card, it should be world class across any commodity, any product.
Manoj Adlakha, pleasure to have you on the show. Thank you very much for your time.
Thank you.